How do top traders gain a true edge in today's, well, rapid-fire markets?
Mhm.
What if the secret isn't some hidden algorithm or, a crystal ball, but something surprisingly accessible to anyone right now?
Welcome to the deep dive. Today, we're unpacking a fascinating shift, the quiet revolution of AI in financial trading. It's truly exciting stuff.
We're seeing how artificial intelligence isn't just for the behemoth hedge funds anymore.
Not at all.
It's actually democratizing these incredibly powerful tools, allowing everyday traders, like you and me, to potentially leap ahead.
Our mission today is pretty straightforward. Transform complex insights from a recent guide on the AI trading revolution into practical, actionable knowledge for you. Think of it as a shortcut to getting up to speed.
Exactly. We'll cover everything from, say, precise chart analysis to robust strategy testing, all powered by AI.
And the best part,
You don't need to be a coding genius to use these methods. So let's explore this. Let's dive in.
let's do it.
Okay, to start, let's really unpack why AI is fundamentally changing the trading landscape.
Yeah.
Certainly pushing some older methods aside.
Yeah, definitely. The guide we looked at highlights 4 core pillars that kind of explain this transformation.
Okay.
Right? The first 2, they're really all about speed and scale. Just imagine AI chewing through mountains of data price history, breaking news, financial reports in seconds.
Seconds.
Wow. Yeah, seconds. Humans, well, we take hours, sometimes days even. It's like comparing a supercomputer to, I don't know, your old pocket calculator.
It's a huge difference.
Huge.
And then there's absolute objectivity. This one feels like a real game changer to me.
Mm.
AI simply has no emotions.
Right.
No greed, no paralyzing fear, none of those human biases that trip up so many traders.
Exactly. It's just pure data, pure logic. It allows for disciplined execution even when you might be hesitating.
That lack of emotion is key.
Absolutely. And it ties into the third pillar, advanced pattern recognition. AI spots these subtle correlations, kind of hidden patterns deep within market data that are just, well, invisible to the human eye.
So things we just wouldn't see.
We might never notice them, connections we'd completely miss.
Okay.
And the last one, personalization and automation. This basically means you can create tools and strategies tailor-made for your specific trading style
Without coding.
without knowing a single line of code. It's like having your own custom trading assistant, right there.
That's pretty incredible.
And what's really surprising here is how many of these powerful AI tools, things like ChatGPT or Claude, they're either free or really affordable.
Right.
So this isn't just for the big institutional players anymore. The field is genuinely leveling out.
Okay, so thinking beyond just the speed aspect,
Okay.
what would you say is AI's single biggest edge over human traders?
I'd have to say it's that pure objectivity. AI just removes emotion from the analysis.
Makes sense. Pure logic. All right, here's where it gets really interesting for me. Chart analysis. It's foundational for technical traders. Right?
Absolutely.
But it's also notoriously subjective. Your support level might be someone else's noise. There's endless debate.
That's the inherent struggle, yeah. Traders wrestle to find key zones consistently. They often miss hidden levels, or they draw inaccurate trend lines, or just get fooled by market noise.
Which
leads to really, really bad decisions, costly ones.
And this is where AI steps in, offering that objective perspective. It acts like a seasoned technical analyst, scanning charts, highlighting critical elements based purely on historical data.
And the steps are surprisingly simple. First, you just take a screenshot of a naked price chart.
Naked meaning.
No indicators, nothing cluttering it up. Clean chart.
Okay.
Then upload it to your AI tool and start asking smart, targeted questions.
Like what? Can you give an example?
Sure. You could prompt it as if you're a trend-following trader. Ask it to identify the main trend, key swing highs and lows, potential pullback areas. Or, if you're more of a range trader, ask it to define the exact boundaries of the range and maybe spot those sneaky false breakouts.
Or you could even role play.
Totally. Ask it to act like a technical analyst who specializes in, say, the Wyckoff method. That's a classic approach to market cycles.
Right.
Ask it to look specifically for signs of accumulation or distribution phases.
And what does the AI give back?
It returns a pretty detailed analysis. The dominant trend, precise support and resistance zones, it often calls them demand or supply zones, and crucially points out no trade zones, those choppy, unpredictable areas where retail traders often bleed money because the market just lacks clear direction.
So it helps you stay out of trouble.
Exactly.
Yeah.
AI helps avoid those profit-eroding traps.
And the advantage seems clear then. Less guesswork.
Definitely. Instead of hours squinting at charts, wrestling with ambiguity, you get a clear market map in minutes. It saves time, mental energy, and ultimately, it saves you money.
So just to summarize that point, how does AI manage to eliminate subjectivity in chart analysis?
It highlights critical elements by purely focusing on historical price data. No opinions.
Got it. Okay, let's talk about another big headache for traders. Conflicting signals across different time frames.
Oh, yeah. The classic dilemma.
The daily chart might scream, strong uptrend, right? But then you look at the 15-minute chart and it's plunging downwards. Which one do you actually trust?
This, my friend, is what causes analysis paralysis. You're just stuck.
Frozen.
Yeah, frozen. Not knowing whether to follow the long-term flow or react to the short-term chop, it leads to missed opportunities or, maybe even worse, really bad entries. It's a real struggle. Honestly, I still wrestle with prompt drift myself sometimes. Finding the right time frame context can be tricky even with AI.
Right, it's not perfect. But this is where AI can really connect the dots, isn't it? It synthesizes information from all those different sources to create a single unified market story.
Exactly. It's like building Lego blocks of data into one coherent, actionable picture.
Well, how do you do that practically?
You just gather screenshots of your typical timeframes, maybe weekly, daily, 4-hour, 1-hour, whatever you use. Then you upload them all at once into the AI tool.
All together.
Yep, all together. And here's the key. Use a comprehensive prompt. Ask for a top-down analysis.
What kind of questions?
Things like, what's the overall story across all these time frames? Which time frame is really controlling the primary trend right now? Is the lower time frame confirming the bigger picture, or is it contradicting it? And based on all that, what's the logical trading bias? Long, short, or stay out?
And the AI pulls it all together.
It delivers a unified report. For instance, it might say something like, long-term trend is up, but it's approaching major resistance.
Okay.
Then maybe medium-term momentum is slowing down, showing some indecision. And finally, short-term, look, a double top pattern is forming, which could be an early warning.
So it gives you the nuance.
Exactly. And then it offers a consolidated recommendation, something like, risk of buying high right here. Maybe consider taking profits or even looking for short-term sell opportunities if that double top pattern breaks down.
That sounds incredibly useful, transforming chaos into clarity.
Precisely. You get a single, actionable plan that considers both the big picture, the macro, and the small picture, the micro. It's really powerful stuff.
So what's the core benefit of AI's multi-timeframe synthesis again?
It creates that unified market story, effectively removing those conflicting signals.
Clarity. Okay, moving on. Many traders have these brilliant ideas for unique indicators, right? Ways to see the market differently.
Oh, all the time.
But then they hit a brick wall. Coding, learning something like PineScript for TradingView, for example, that can feel incredibly daunting.
It really can, and the problem is obvious. Custom indicators usually demand programming knowledge, or you need to hire an expensive developer.
So the ideas just die.
So many creative ideas just sit unrealized. It's a shame.
But AI can step in here.
Yeah, AI steps in as your personal programmer, essentially. You simply describe your indicator idea in plain, everyday language.
Just describe it.
Just describe it. The AI then translates that description into functional source code. It's pretty amazing when you see it work.
You need to be specific, though, right?
Oh, very specific. For example, you could ask for a PineScript indicator that combines, say, a 21-period EMA.
Exponential moving average.
Right, which smooths price data, and maybe a 50-period EMA, along with ADX14. ADX, the average directional index, helps measure trend strength.
Okay, so you list the components.
Exactly. And then you specify exactly how you want it to behave visually. Like, I want the chart background colored light green when the 21 EMA is above the 50 EMA and the ADX is greater than 25.
Indicating a strong uptrend.
Right. Make it light red for a strong downtrend conditions are met. Otherwise, just leave the background transparent.
And the AI just writes the code.
It generates the PineScript code. You can even ask it to add comments within the code itself, line by line, so you actually understand what each part does.
That's helpful for learning.
Very. Then you just copy that code, paste it into TradingView's Pine editor, save it, and add it to your chart. Boom. Your custom indicator is live.
What about errors? Code rarely works perfectly the first time.
That's the other fascinating part, the debugging. If you get an error message, and you probably will, it's actually quite common.
Right.
You just take a screenshot of that error message, upload it back to the AI, and ask it to fix the problem.
Seriously.
Seriously, it's this iterative loop. Describe, generate, test, debug with AI, test again.
Wow. The implications of that.
The real beauty is you can experiment endlessly. Try out all sorts of ideas without any development costs eating into your capital. You get to create genuinely proprietary tools, potentially seeing signals that standard indicators completely miss. Whoa. Imagine scaling that kind of idea generation. The possibilities are just vast.
That's mind-bending. So just to reiterate, how does AI actually enable non-coders to build these custom indicators?
It basically translates plain language ideas directly into functional programming code.
Incredible. Okay, let's switch gears a bit to fundamental analysis.
Sure, the longer-term view.
Right, it's undeniably important for investing, but wow, it's also a huge time sink.
Oh, yeah.
Reading hundreds of pages of financial reports, analyzing dozens of ratios, comparing competitors, that's practically a full-time job in itself.
And that's the inherent challenge for most retail traders, isn't it? They just lack the sheer time or maybe the specialized expertise for truly deep fundamental analysis.
So they miss things.
They miss crucial factors, or they end up making superficial decisions based on incomplete data, often poor decisions.
And AI's role here.
This is where AI transforms into your personal financial analyst. It can read, summarize, and analyze extremely complex financial documents in literally seconds.
How does that work? What do you feed it?
You feed it the data. You can copy and paste news articles or earnings call transcripts. You can even upload PDF annual reports or quarterly reports directly.
Okay, got the data in. Then what?
Then you ask pointed, in-depth analytical questions. For an earnings report, for example, you'd ask about revenue and earnings growth trends over time, specific profit margins, maybe any unusual items that jump out, or the key risks highlighted by management in their commentary.
What about comparing companies?
Yeah, for a competitor comparison, you can provide data for two companies and ask direct questions like, which one has a better valuation based on PE ratio or price to sales?
Key valuation metrics.
Exactly. Or maybe which one has a healthier balance sheet, less debt, more cash, or stronger growth potential looking forward.
And the AI crunches the numbers.
It delivers unbiased, incredibly detailed insights. We're talking speed and precision in seconds, pulling out exact figures. Crucially, it's unbiased. It focuses solely on the data you give it.
No narrative bias.
Right. And it even simplifies complex financial jargon, making it easier to understand. It can even perform a comprehensive SWOT analysis for you, identifying strengths, weaknesses, opportunities, and threats.
That's a standard business analysis tool.
Yep, done in seconds. The strategic advantage here is just so clear. Work that once took hours, maybe days, now takes minutes. You essentially get analyses that mimic having a personal financial team,
Leading to better decisions.
allowing you to make much wiser, data-driven investment decisions.
Okay, boiling it down. What's the main efficiency gain from using AI in fundamental analysis?
It processes vast amounts of financial data in seconds, providing clear, unbiased summaries.
Speed and clarity again. Makes sense. Now let's talk strategy. Every trader, no matter how experienced, has blind spots in their strategy.
Guilty as charged. We all do.
Maybe a strategy works great in a nice trending market, but it just falls apart when things go sideways, right?
It becomes all the time.
So AI can act as your devil's advocate here, finding those flaws before the market brutally points them out.
Precisely. It's tough because traders often fall in love with their own strategies. It makes objective review incredibly hard.
You get attached.
Yeah, you miss subtle weaknesses. Or you fail to anticipate the specific market conditions where your beloved system will simply collapse.
So AI brings the cold, hard truth.
It critiques your strategy logically, completely emotionlessly. It shows you the hard truth about your system without any ego getting in the way.
Why do you set that up?
You need to present your rules in meticulous detail. The market you trade, the time frame, your exact entry rules, where you place your stop loss, you take profit targets, and your overall risk management approach. Be very, very specific. Leave no ambiguity.
Got it. Lay it all out.
Then you demand brutal honesty. Use a prompt like, analyze this strategy ruthlessly. What's its biggest weakness? Under what specific market conditions will it absolutely fail? Do any of my rules contradict each other? Does this thing even have a real statistical edge, or am I just getting lucky? And finally, suggest concrete improvements.
Wow, that's direct.
You have to be. And AI will uncover critical blind spots you might never have seen yourself.
Such as?
It might point out a lack of proper market filters, which leads to taking false signals in choppy, ranging markets, or maybe logical contradictions between your entry rules and your exit rules that you overlooked, or even just suboptimal risk management parameters.
Sure, things you're too close to see.
Exactly. This method is far more effective than trying to critique yourself because it completely removes ego and emotion from the equation. You get an objective, purely logic-based review of your system's viability.
Okay, so how does AI enhance strategy review compared to just doing it yourself?
It provides that objective, emotionless critique, revealing hidden flaws you'd likely miss.
Makes perfect sense. All right, let's talk about screening for opportunities. Tools on platforms like TradingView are powerful, no doubt.
Very powerful.
But staring at a list of, say, hundreds of stocks that passed your filter can still be overwhelming. You get that nagging feeling you're missing something important in the list itself.
Totally. The problem isn't just the initial filtering, it's the manual analysis after you get the list. It's repetitive, it's time-consuming.
And you can miss the bigger picture.
Easily. You can miss broader sector trends playing out within your results or subtle patterns in the data across the list.
So AI helps analyze the results of the screener.
Exactly. AI steps in as your market data analyst for the screener output. It looks at your results table, which can be just a massive wall of numbers, and then draws insightful, actionable conclusions from it.
How's that done?
You simply screenshot your screener results table. Let's say you screen for U.S. tech stocks over $10 billion market cap with a PE ratio under 25. Take a picture of that list.
Okay.
Upload that image to the AI tool.
And ask questions.
And then ask exploratory questions. For sector analysis, you might ask, looking at this list, are there any prevailing trends? Which specific sectors seem to be outperforming or underperforming within these results?
Interesting. What else?
For anomalies, do you see any unusual metrics that really stand out from the rest? What might those outliers suggest? Or even to optimize the screener itself. Based on these results, can you suggest changes to my filter parameters to perhaps refine this list further?
So it's analyzing the group behavior.
Precisely. AI gives you actionable insights that cut through the noise of the list. It helps you quickly identify potential sector rotation, detect performance clusters you might not have noticed, and flag those crucial outliers that warrant a closer look.
Could be useful during earnings season.
Absolutely. You could ask it to narrow down stocks from your list that have upcoming earnings releases, specifically to look for potential volatility plays based on past reactions or current metrics.
Okay, so what unique value does AI add to standard stock screening?
It analyzes the actual screener results to identify trends and anomalies quickly.
Got it. Moving towards application. Do you ever find yourself loving a certain technical indicator?
All the time. We all have our favorites.
But you just don't know how it would actually perform if you traded it mechanically.
Yeah.
The full executable trading system.
Yeah, that's a common frustration. The inherent problem is an indicator is usually just a visual cue, right? It totally lacks specific entry rules, exit rules, or critical risk management parameters. So, assessing its true effectiveness, its actual profit potential over time, is incredibly difficult based on just looking at it.
You can't backtest an indicator alone.
Exactly. But AI can become your trading system developer here. It takes an indicator source code and intelligently adds all the necessary trading logic around it,
Turning it into.
A complete backtestable strategy.
How would that work? Let's use an example.
Okay, let's say you get the Pine script code for your favorite indicator, maybe something popular like Supertrend.
Okay.
You feed that code to the AI, and then you simply ask the AI to convert it into a strategy.
What kind of instructions do you give?
Your request needs to be clear and precise. Something like, turn the Supertrend indicator Pine script code into a complete TradingView strategy. When the super trend line turns green, I want it to open a long position. When it turns red, open a short position. I want the strategy to always be in the market, either long or short. And please add user inputs for trade quantity and estimated slippage.
Very specific rules.
You need to be specific. Then you take the AI-generated strategy code, implement it right into TradingView's Pine editor, save it.
And then the magic happens.
You go to the Strategy Tester tab in TradingView, run the back tests on historical data, and instantly see key performance metrics.
Like profit.
Like total profit or loss, maximum drawdown, profit factor, win rate, all the crucial stats.
What if the results are bad? Which they might be initially.
Which often happens. An indicator alone rarely makes a great strategy. That's where you iterate with AI. You go back and ask it to optimize.
Oh.
You could ask it to add a trend filter. For example, modify the strategy. Only allow it to take long trades when the price is above the 200-period exponential moving average.
Filtering out counter-trend signal?
Exactly. Or you could ask it to introduce a specific risk management rule, like a percentage-based stop loss on each trade.
So it's a refinement process.
It's an iterative cycle. You keep refining, adding filters, changing the exit logic, testing different parameters with the backtester until the strategy's performance aligns with your risk tolerance and your trading goals. It's an incredibly powerful way to build custom data-tested systems.
Okay, so how does AI bridge that gap between just an indicator and a truly usable trading system?
It adds that specific entry, exit, and risk management logic directly to the indicator's code.
Turns a visual cue into a testable process. Great. Let's talk journaling.
Ah, the bane of many traders' existence.
A detailed trading journal is arguably the most powerful tool for self-improvement a trader can have. We all know this intellectually.
We do.
Yet most traders are, let's be honest, incredibly lazy about actually keeping one consistently.
It's true. Manual journaling feels tedious, and analyzing it properly is even harder. Most traders just scribble down their profit or loss, maybe a ticker symbol.
And ignore the important stuff.
They completely ignore crucial psychological factors, why they took the trade, how they felt, whether they followed their rules. They end up missing out on invaluable lessons buried in their own trading history.
So how can AI help here? Beyond just, nagging you to do it.
AI acts as your system's architect for journaling. It can design a perfect journal template tailored specifically for you, and then, more importantly, help you deeply analyze the data you collect over time.
How do you start designing the template?
First, you simply ask the AI to build your ideal template in a spreadsheet format. Tell it what columns you want: date, ticker, entry price, exit price, P&L, profit and loss, strategy used, maybe position size, and definitely a dedicated notes column.
Okay, standard stuff. What's the AI advantage?
Then, crucially, you ask it to add automatic calculations. Request a separate dashboard tab that automatically calculates your key performance metrics from the log: total P&L, overall win rate, average profit versus average loss, your profit factor, largest drawdown.
And it gives you the formulas.
It'll give you the exact spreadsheet formulas to paste in. Takes seconds.
What about the qualitative stuff, the notes?
That's the game changer. You can ask AI to create a structured template for your notes. Instead of a blank box, it gives you prompts for the notes lessons column.
Like what kind of prompts?
Questions like, did I follow my entry rules strictly? Yes, no. Did I follow my exit rules? What were my emotions before, during, and after the trade? What's the single biggest lesson I learned from this specific trade, win or lose?
Forces you to reflect.
Exactly. But the real magic, the deep insight, happens after you've logged a decent number of trades, say 30 to 50.
What do you do then?
You export your journal data carefully, excluding any sensitive personal info like account numbers, of course, maybe as a CSV file, and then provide that data file to the AI.
Feed your history to the machine.
Yep. And then you ask a truly game-changing question, something like, act as an elite trading performance coach. Analyze this journal data. What are the recurring patterns, positive or negative? What patterns show up consistently in my losing trades? What's my biggest strength revealed by this data? And based only on this data, what's the single most impactful change I could make to my trading process right now?
Wow, that's powerful.
AI will find patterns you never would have noticed on your own, guaranteed.
Like what?
Like maybe you subconsciously increase your position size right after a losing streak, leading to bigger losses, revenge trading evidence. Or maybe it discovers that your absolute best, highest probability trades consistently come from one specific setup you weren't even fully aware was your strength. It's remarkably insightful for self-improvement.
Okay, so what makes an AI-powered trading journal superior to just keeping a manual one diligently?
It finds those hidden recurring patterns in your actual trading behavior, enabling much deeper insights.
Insight through data. Okay, we've covered a lot of powerful applications, but AI isn't magic, right? There must be pitfalls.
Absolutely. AI is incredibly powerful, yes, but it's definitely not a silver bullet. Using it blindly, without understanding its limitations, can easily lead to making even worse mistakes than before.
Okay, what's the first major pitfall?
First, always remember, garbage in, garbage out. It's a classic data science principle. Meaning the quality of the AI's analysis depends entirely, 100%, on the quality of the data and prompts you provide. Feed it a noisy, unclear chart or vague, ambiguous rules for your strategy. You'll get useless, potentially misleading results back. Simple as that.
Makes sense. Input quality matters. What else?
Second big one, over-reliance, the autopilot trap. This is crucial. Never, ever fully delegate your trading decisions to AI.
Don't let it drive.
Exactly. Think of AI as your incredibly intelligent co-pilot. It provides analysis, data, suggestions, but you are still the pilot. The final decision to click the button to enter or exit a trade must rest solely with you, your capital, your responsibility.
Okay, co-pilot, not pilot. Got it. Any other traps?
Then there are the infamous AI hallucinations. Especially with visual data like charts, large language models can sometimes misinterpret patterns or even, frankly, invent things that simply aren't truly there in the price action.
And makes things up.
It can happen. So always cross-check its findings. If the AI suggests, say, a head and shoulders pattern is forming, quickly pull up the chart yourself and confirm visually that the pattern meets your criteria. Don't just take its word for it. Verify.
Trust but verify. What else?
Also remember, AI often has a lack of real-world context. Unless you explicitly feed it the information, the AI doesn't inherently know about an unexpected Federal Reserve interest rate announcement happening right now, or a sudden geopolitical conflict flaring up, or that a CEO just resigned under scandal.
Stuff that moves markets instantly.
Exactly. Humans still excel at integrating this dynamic, qualitative, real-time information. AI primarily works with the data it's given.
Good point. One more.
And finally, a big one for system development, overfitting and backtesting. AI can be too good at finding patterns in past data. It can create trading systems that look absolutely perfect, unbelievably profitable on historical data,
But then fail miserably.
but then completely fall apart in live market conditions because they were tailored too perfectly to past quirks, not underlying principles. Always be deeply skeptical of any too-good-to-be-true backtest results. Past performance is never, ever a guarantee of future results.
Healthy skepticism is required. Okay, lots of power, lots of pitfalls. So how does someone listening actually start this journey to become a truly AI-powered trader without falling into these traps? The guide laid out a roadmap, right?
Yeah, it provides a really systematic week-by-week roadmap, which I think is quite helpful.
Yeah, week one.
Week one is about laying the analytical foundation. Start by mastering AI for basic chart analysis, like we discussed, and getting comfortable with multi-timeframe analysis using AI. And crucially, use AI to set up your intelligent trading journal from day one. Build that core data gathering habit.
Foundation first. Week two.
Week two, deepening your research. Now you start using AI for fundamental analysis, maybe on stocks you're watching. Then, take your current trading strategy, if you have one, and stress test it using AI's objective critique. Also, begin integrating AI into your stock screening process to analyze the results.
Building on the foundation. Week three.
Week three, advanced applications. This is where it gets exciting. Try creating your very first custom technical indicator using AI. Then take a favorite existing indicator and use AI to convert it into a fully backtestable strategy. Start that optimization process.
Getting into development. And week four.
Week four, refinement and systemization. Now, you should have some data in your journal. Analyze that journal data with AI to find those hidden patterns. Use that feedback to refine your strategies. The goal here is to build a consistent, repeatable, robust AI-powered workflow that fits your style.
A month to get a solid start. That seems achievable. Okay, thinking about those pitfalls again, what's the single most critical one to constantly remember when using AI for trading?
The most critical, I'd say. Never fully delegate decisions. Remember, AI is your co-pilot, not the pilot.
Always be the pilot. Got it.
Yeah.
So let's zoom out. What does this all really mean for the average person listening? What's the big idea here?
The big idea, I think, is that AI isn't just changing trading in some abstract way. It's genuinely leveling the playing field dramatically.
How so?
Well, you no longer need access to incredibly expensive institutional-grade software or years of advanced technical skills like coding to leverage these powerful analytical techniques.
The tools are more accessible.
The tools are accessible, often free or cheap, and the methods we've talked about today are practical. Anyone can start applying them.
And the goal isn't necessarily automation.
No, the goal isn't really to have AI trade for you, at least not initially for most people. It's to leverage AI to analyze markets much faster, with far greater objectivity, and with an incredibly clear focus compared to what you could do alone.
It's about augmenting human skill.
Exactly. It's about spotting patterns you might otherwise miss entirely. It's about systematically building and rigorously testing trading strategies based on data, not just gut feeling.
And the learning aspect.
And it's about learning from every single trade you take in a much more profound, data-driven way, thanks to that AI-powered journal analysis, helping you continuously improve month after month. This is how you build a lasting edge in today's markets.
The future of trading is truly here, isn't it? And it's powered by artificial intelligence. It seems like ignoring it isn't really an option if you're serious.
Yeah, you really don't want to get left behind on this shift.
So what's the challenge for our listeners?
Our challenge to you is simple. Pick just one AI application from everything we've discussed in this deep dive. Just one.
Start small.
Start small. Try it out with your very next trade analysis or strategy idea. The difference it makes could be immediate and quite surprising.
We really hope this deep dive has given you a valuable shortcut to being well-informed on this AI revolution in trading, hopefully sparking some aha moments, and maybe a desire to explore these tools even further. Thank you so much for joining us today.
It's been fun. Until next time, keep learning, keep exploring, and keep diving deep. OTO Row Music.